our procedure or my procedure. So today being the first day, first class for this diet. So let somebody open this class with prayer. Anybody that is led in the spirit. Okay, amen.
Yeah, in the name of Jesus, Lord, we thank you for this moment. I will thank you for the PSAF. Thank you for the teacher. Thank you for the students. So be that magnified in the name of Jesus. This is a journey that is starting today. Lord, we ask that the reward of whatever seed we're going to be sowing, sacrifices, coming for the classes and all of that, will be given unto us in the name of Jesus. At the end of everything, what we want to see is to pass. Give us the grace to pass in the name of Jesus. You said in your word that the steps of the righteous are ordered. Order ourselves and onto what to do during this class in Jesus' name. Amen.
Amen. Amen. So thank you for that wonderful prayer. And we pray that as we are starting, we are going to head in good mode. So thank you for that. Let me introduce myself. For some of the students that know me, in the previous class, I think that will be last week in financial management. I can see some of us here now. So my name is Yusuf Olatunji, popularly known as Success. So I am one of the lecturer in charge of public sector accounting and finance. So I will be taking the theoretical aspect of this syllabus, while Mr. Michael will be taking the calculation aspects of the syllabus. So for the syllabus review, so we are taking into consideration all the adjustments and all the new topics that is being introduced to the syllabus, which must all be taken because the syllabus will be tested in this coming diet. So before we proceed again, I would like to also communicate with us our rules and regulation of the class. And the essence of this is for us to have a smooth process without any form of hindrance. Number one rule is that as we are joining the class, you need to mute your mic. You mute your mic in order not to distract the flow of the class. So as we all did now, that is one of the rules that we expect you all to abide to. Number two, try as much as possible not to miss any of the classes. Try as much as possible not to miss any of the classes. In case you have a very important thing to attend that make you to miss the class, there is still an opportunity for you if you are not in the class real time to participate. Then the recorded will be available. I believe my recording has started. Somebody should confirm from their end if the recording is on.
Yes, it is.
All right.
Yes, sir.
So thank you. So the recorded class will be available. And you can also make sure that you did not miss the class if you are not available real time to participate due to one task or the other. Endeavor to go through the previous class through your video recording. Try as much as possible to go through it before the next class so that we will all be at the same page. Rule number three, to make sure you have all your writing material available. All your writing material, make sure that you are having them available. And we are talking about the writing material here. You have your notebook, you have your pen, and you have your calculator. In my own case, you may not need calculator because we'll just be doing the talking aspect of the syllabus. But for the calculation aspect, please make sure you make provision for your calculator. And please, your calculator should be at this point. You should get that calculator at this point, not as at when you're about to write the exam, so that you discover any problem that such calculator may give you now and rectify the problem. If need be, buy another one so that you have a very good calculator before the exam. Then lastly, if you have any question while the class is ongoing, you are free to put up your hand. I will recognize you from my screen here. Then once I call on you, you can unmute your mic, ask your question, mute back, then we continue on the process. And we have a lot of other goodies that we are going to be giving to you, hints on how to easily grab what we are taking and how to easily pass your examination. So we may not be able to attend to all the do's and don'ts and the hints that we are going to be sharing with you. But as the class is ongoing, we are going to be communicating most of the hints to you all. So that is what we're having now. Oluwadamilare, your hand is up.
Yes, good evening, sir.
You're welcome.
Yes, sir. Sorry, I just want to ask a question. Will there be a lecturer that will, at a particular time, take us through IPSA standards, maybe a reasonable amount of the standards before the exam?
Okay. That is part of what we complain about during the syllabus review. If you look at the IPSAS we have, I think the IPSAS is almost up to 40 or 50 IPSAS, if not more than that. But the examiner wants to base the IPSAS to be a specific one that are related to the exam, though that will be applicable to the examination. So Mr. Michael is the one in charge of the IPSAS and is going to be taking us accordingly. In fact, there are some of those IPSAS that will be relating to some of the topic that you'll be treating at this initial stage, while there are some that will just be applicable for the examination alone, then the remaining one will be left aside. So Mr. Michael is the one in charge of IPSAS. Oluwadamilare, is that taken?
Yes, sir. Thank you, sir.
You are welcome. All right. Moving on to the business of the day. So this my slide I'm going to share with us after the class today. Then we follow up. At any point in time, I will still make amendments to some of the outdated data that we may have in the syllabus. Then the topic that is yet to be added, promising as well, before the middle of the diet, we are going to include that topic to the slide. Lekan Alaka.
Okay, yeah, good afternoon.
Good
Sorry,
evening, sir.
evening. Good evening. So sorry, what are those IPSAs for some of us that are just writing this course for the first time? Explanation.
Okay. Talking about the IPSAS, we have a very long queue of IPSAS. And don't be panic about the IPSAS. It's just few that will not be related to what you are doing in your financial reporting. It will just few that will not be related. Just that the number may not be the same thing with that of your financial reporting that you are doing now. So let me see the one that I can still remember for now on the IPSAS. They are long. We have IPSAS 1, which is also relating to your IAS 1, presentation of what? Financial statements. IPSAS 2, we have cash flow statements. And in your IAS, what statement that is covering cash flow statement? I think IAS 7, if I'm not mistaken.
Yes, IS7.
Yes, I
So we
accept.
have IPSAS 3, accounting policies, changes in accounting estimate and errors. In your financial reporting, accounting policies, changes in accounting estimate and error, I think IAS 8, if I still remember.
IS8.
Very good. So we have IPSAS 4, the effect of changes in foreign exchange rates. This should be in IFRS, if I still remember that very well. We have IPSAS 5, borrowing costs. So we have a lot of that IPSAS. I'm going to screenshot those one that I am having at my tip here. I will screenshot and send to you. Then the applicable one, Mr. Michael will know those that are applicable for the examination, because it is not all the IPSAS that you are going to write. As I'm having here, I'm having IPSAS up to 49. IPSAS 49, retirement benefit plans. And aside from that, there are some of them that you even notice that we will not be able to make use of some of them now because of the effective date in which some of these IPSAS will be commencing, like that of IPSAS 49, retirement benefit plans. It will take effect in January 2026, and we are in 2025. So if this will take effect in 2026, so it will not be applicable now. And another thing about this IPSAS again, aside from the one that are related to preparation of account, majorly, every other one are just theory. Majorly, they will be theory. And they are related. There is no difference. The terminologies used in defining most of these IPSAS is also the same terminologies that you are going to have in your financial reporting. So don't be panic about that. Augusta.
Yes, sir. Good evening, sir.
Good evening.
Yes, sir. I wanted to confirm if I thought, because I just joined the group, so I don't know if you share the material or kind of.
I have not.
Okay.
Then the other lecturer that shared some material this morning too, I don't think he has made use of any of the material because there was network challenge this morning. Okay. So let's go. Introduction. Okay, we have public sector accounting and finance. Public sector accounting and finance, PSAF. So today we are going to be looking at introduction to public sector accounting, although totally from the new syllabus. The aspect of the introduction to public sector accounting removed totally. The objective of public sector accounting removed. So the topic started with what? The constitutional and regulatory framework of public sector accounting. But that doesn't stop us with the introduction, because the examiners believe that at this stage, it is not the definition of public sector accounting that we are going to be asking ourselves, or the objective of public sector accounting. But we need that introduction to know what is the basic data or basic information that we need to have on the subject that we are taking. In public sector accounting, just differentiate between the public and the private. With the distinction between public and private, you can now combine it with what? Accounting. So the private accounting or the private sector accounting is the accounting that is being prepared by an individual corporate entity. And they are not responsible to the general public, rather to the management of the entity. While the public sector accounting is relating to account of the whole federation, which will be entrusted to public officers to carry on the business of the government and give stewardship reports, accountability, transparency on the financial statement of the government. And the financial statement of the government is relating to the financial statement of the whole nation. So the term public sector refer to all organizations which are created, administered, and financed by government. That is public sector. From the taxpayers' money on behalf of the members of the public. So since we identify public sector to be an organization being created, monitored, administered, and financed by governments with the use of taxpayers' money. You and I money is being used to create, administer, and finance the government financials or government activities. So public sector accounting is now concerned with the receipts, the custody, and disbursements, receipts, custody, disbursement, and rendering of stewardship on public funds. And the basic source of the government fund is through taxation. That is the primary, through taxation. That is one of the major sources of revenue. So this revenue that is being collected from all the citizens of the federation and being given to the government to carry on the business of the nation. Then the government now need to give what? Records, reports on how this money is being spent. That is public sector accounting. Objectives of public sector accounting. So in other way, if you want to define public sector accounting, the definition can still be as you define your financial accounting. What will just be different in it is that of what? Everything will be of the government. Accounting can be defined as the recording, classifying, sorting, analyzing, interpreting, and making financial decision on what? On the public funds or of the government's financial activities. So let's look at the objectives of public sector accounting. What is the aim of this accounting? And this aim will need to align with the purpose of the government. And the primary objective of the government is to create or is to make provision for what? For security and welfareism of the citizen are the core purpose or primary purpose of government. If that is the case, so definitely the funding of government should be covered or should be governed towards the purpose of the government. So the objective include the following. One, to provide the means by which actual performance may be compared with targets set by the government. And that is through what? Through budgeting. Budgeting. Through budgeting, we have what? Expected and we have actual. The budgeting is a forecast of financial activities that will be carried on by the government on behalf of the citizen. And that is a projection. That will be a projection. And your projection at times may be the actual outcome, or it may not be the actual outcome, either upward or downward differences. So one of the objectives of public sector accounting is to do what? Is to carry out comparison between the budgeted figure and the actual figure in order to know the variance. So to provide the means by which actual performance may be compared with the target set by the government. 2, ascertaining the legitimacy of transactions. How legit, how legal are some of these transactions with the proof of what? Evidence of the transaction. In the government budget, government promised to do what? To construct Lagos Calabar Coastal Road. And from that budget, we are having the actual report. So from so kilometer to a particular kilometer, a certain numbers of construction were made. But how legit is that transaction? Can we physically verify such transactions? So ascertaining the legitimacy of transactions and their compliance with the established rules, regulations, and statutes. So money will not be expended without being passed by the law, which is through normal appropriation procedure. The budgeting will be presented by the government and by the president to the National Assembly. The National Assembly will vet. If there is any amendments, they will make an amendment, send back to the president for adjustment. After the president adjusts, send back to the National Assembly. The National Assembly, after satisfy all the procedure, give an approval, send back to the president for the president final assent, which is final approval by the president. Then now it will now become law that this is what we are going to expend for the coming appropriation period. With that, that is the norms, regulations, and what? And statutes. And there are still procedure, even after it has been assented by the president, we still have further procedure to be followed before such money will be expended. So at any period in time where government wants to execute any of the budget that has been approved, then such approval will still go back to the National Assembly. The National Assembly will authorize the Minister of Finance to release funds to carry on part of the budget that has been approved in the annual estimate. So the objective of the public sector accounting is also to do what? To ascertain the legitimacy of transactions and their compliance with the established norms, that is rules, regulations, and statutes law. The next one is to evaluate the economy efficiency and effectiveness with which government is carried. Now, this is talking about value for money. The 3 is economy, efficiency, and effectiveness. The value for money. Do we have value for most of the estimates that we have in our annual budget? Not that we are just going to be having a report of the total expenditure without the benefit on such expenditure. Economically, resources should be sourced at a cheaper cost, which will give us optimal output and avoiding wastage, efficiency, avoiding wastages, and to attain the maximum output, which is effectiveness. How effective is the use of that government's resources to create some of these amenities? An example of which, the Lagos Calabar Coastal Road. I think the construction, the quality of the road cannot be compared with some other ordinary road construction. So our effectiveness, then what will be the durability of such projects? The next one is highlighting the various sources of revenue receivable and the expenditure to be incurred. So that's part of the function, objective of public sector accounting. That is through planning. Through planning. Our budget can either be surplus or what? Or deficit. So one of the objectives of public sector accounting is to give what? Appropriate planning, is to carry out appropriate planning. So highlighting various sources through highlighting various sources of revenue receivable and the expenditure to be incurred. And lastly, identifying the sources of funding capital projects. And this usually come up in a situation whereby the government's revenue receivable will not be sufficient enough to cater for expenditure in an annual estimate. So government will now look out for what? Other sources of financing capital projects. Are we all together?
Yes.
Yes, sir.
Yes, sir.
So let's move on to the constitutional and regulatory framework of public sector accounting. Constitutional and regulatory framework of public sector accounting. What are the law that guide the preparation and presentation of public sector accounting and financing? So what are the law and the rules and regulations that govern the preparation of public sector accounting? Number one, we have the Nigeria Constitution. Nigerian Constitution 1990 as amended discuss in details the role of the government in relation to the public sector accounting. We are going to still meet most of this in the subtopic that we are going to be treating. And part of it, we have in the federation account. So it is still under the Nigerian Constitution that highlighted how the federation accounts will be managed. We have Audit Ordinance of 1956 or Act of 1956, which cover the auditing of the public sector accounting. We have financial regulations. This financial regulation, I think the latest financial regulation is well, maybe 2000 and, if I'm not mistaken, that will be 2021. It will be a review, and the first financial regulation was in 1956. Then it was amended 2004 before the latest amendment in 2021, which will cover the rules and regulation on how government finances will be carried out. And that is why we did not have a specific date on that. So we have Finance Act of 1958, so which is Financial Control and Management of 1958. Cap 144 of the 1990. We have Finance and Treasury Circulars. These Finance and Treasury Circulars will also be communicated when there are any amendment or new law in relation to finance that would need a fast approach, and that will be communicated to all the finance departments in the federation. We have Public Procurement Act 2007, which is relating to the procurement of government assets and consumables. Procurement of government assets and consumables, as well as procurement of construction activities or a project. Public Procurement Act of 2007. We have Fiscal Responsibility Act of 2007. And lastly, we have Appropriation Act, which talks more about the process to be taken in the annual budget. So these are the constitutional and regulatory framework of public sector accounting and finance. I believe we are together.
Yes, sir.
Yes, sir.
Yes,
We
sir.
move on. All right. We move on
Yes, sir.
to basis of accounting in public sector accounting. As we have basis of accounting in your conventional financial reporting. In fact, some of our discussion here, we can be making distinction or differences between what we are having in the public sector compared with what we have in our normal conventional financial reporting. So the basis of accounting in public sector accounting. So the two major bases we have in accounting, we have what? The cash basis and what?
Accrual
Accrual
basis.
basis.
Thank you very much. Cash basis and accrual basis.
Accrual basis.
These two bases are very easy to understand and operate. Looking at the first basis, which states that it is what? Cash in nature. The word cash may not be a physical cash. It can be a cash and cash equivalent, a transfer, what is it called? Financial instruments among other, provided that it is acceptable as a means of what? Transaction between the two parties. So if you are relating to cash, it may not be necessarily be what? A demand deposit, a physical cash in hand. So this basis is the basis of accounting under which revenue is recorded only. I'm supposed to bold this only. Revenue is recorded only when what? When cash is received. You recognize transaction as what? As revenue only when you have received the cash. And I stated earlier, it may not be a what? A direct physical cash in hand. It can be a what? A transfer or any other means of acceptance. So it can be an exchange of financial instrument for such exchange that you want to carry on. So it's the basis that recognize transaction only when cash is involved. So it will recognize revenue. Revenue will be recorded as revenue I've sold. Only what? Only when cash is received. An expenditure will be recognized only again when what? When cash is paid. You recognize expenditure only when cash is paid, irrespective of the fact that the transactions might have occurred in the previous accounting period. So before going forward further with this explanation here, irrespective of the fact that what the transactions might have occurred in the previous accounting period. That means it does not give room for what and what?
Credit transaction.
Credit transactions.
Which is both. It doesn't give room for creditors and what? And debtors.
Debtors.
So it's for the two, not for one alone. So irrespective of the fact that the transactions might have occurred in the previous accounting period. So we are in July. So maybe in December 2024, I have sold an item to you, but I have not received the cash. So that item is assumed to still be part of your inventory until when you receive that cash. So in other words, income is recognized as it is received in the form of cash expenditure or in form of cash. An expenditure is recognized as money is paid. That is cash basis. So let's look at the advantages and disadvantages. Even without looking at the book, you can give the advantages and disadvantages of the cash basis. One, he said it is what? It is very simple to understand. Yes, cash. When I've not received cash, and it is what is mostly common, what is commonly used in most businesses nowadays. You have a cashier and you have your accountant, or you have your a sales, you have your cashier, and you have your dispatch. So your transaction will not be recognized. Not until what? Not until when the cash is being received. Not until when you receive the cash. So it is very simple to understand and develop because it is based on mere recording of cash receipt and payment. That is just the simple advantage of it. Very simple. Even somebody that mostly just look at some of the shopping outlets. Majority of the cashier, some of them may not even be a graduate, not necessary, provided that somebody can recognize that have you made your payment and you can see it in the bank statement. Yes, that is cash basis. Your payment is received. You issue receipt, you give it to the customer to go and cash in what? In the store or the warehouse. So it is very simple to understand. And very easy to develop because it is based on the mere recording of cash receipts and cash payments. Then as well as you as a cashier or account clerk, you are having a petty disbursement to your float. And you can only recognize expenditure only when you have paid cash out to cater for some of your petty expenses. That is cash basis. So it permits easy identification of those who authorize payments and collect revenue. So it is very easy to trace who approve these payments and who receive the payment on your behalf, who approve payments and who also collect revenue on behalf of an organization. So it gives easy identification of those who authorize payments for expenditure and those who collect revenue. It saves time and easy to operate. That's the repetition from the easy to operate is a repetition from the first advantage. Very simple to understand. So it's easy to operate. So it saves time is another point. Saves time. Disadvantages. It takes unrealistic view of financial transactions as only the settlement of liability is recognized. So it takes what? Unrealistic view of financial transaction. And if you look from the definition we are given, we said irrespective of what? When the transaction could have taken place, but we will only recognize the transaction to take place only when cash is involved. And that is not a realistic financial transaction. Something occurred in last week, and we're not recognizing today to be the day that we carry out the transaction. So it takes unrealistic view of financial transaction as only the settlement of liability is recognized. So settlement of liability in two sides, you as a payer or you as the receiver. So if you are a payer, you have somebody has carried out a particular project on your behalf, which you need to pay such immediately based on cash basis, but you are not paying immediately, you are paying in a later period. So that does not give a what? A realistic view of financial transaction to ascertain that transaction to be a cash basis. Performance under this approach is poorly measured since recognition is given to use of limited cash in any service delivery. And for this performance under this approach, taking for instance, if you're having a perishable goods that will have what? Expiry period. And maybe the expiry period of we have different perishable goods that last. Some will last for 3 months, some will last for 6 months. I think the maximum for consumable foods is perishable food, sorry to say, is 6 months. So drinks, foods, maximum 6 months. Then there are some other foods that their expiry period will be lesser. Some will be 2 months, some will be a month, some will even be a week. So with that, the manufacturer will not want to fall into the victim of what? Loss. So they can move this item to where? To the receiver. But it will not be recognized in the basis of what? Cash basis. Until what? Until when the payment is being made. So performance under this approach is what? Poorly measured, since recognition is given to the use of limited cash in any service delivery. The second approach or the second basis is accrual basis. This is just like word and opposites. Under this basis, revenue is recorded when yes, you have item that you want to sell and you are selling it today, but you have not received the payment. You have recognized it as revenue immediately. An expenditure will be acknowledged as liability when known. When you know that this is my responsibility, you recognize it as what? Liability, even when you have not made the payment. Or benefit received, even when you have received the benefits and you have not made your payments. So accrual basis is the basis of accounting, where revenue will be recorded when an expenditure will be acknowledged as liability when known, or when benefit is being received. Happiness.
Please, sir, can you show the current page you're on? And please repeat the accrual basis that you just explained. Thank you.
So the current page is page 3 of the slide, and I hope you can see the current page now. Hope you are all seeing the movement of the page as I'm scrolling.
Yes,
Yes.
All right. So
Yes,
accrual. All right. So please, if you are not seeing the movement of the slide, check your network connection. Then the accrual basis recognizes transaction when activity have been taking place. When activity took place. So whereby revenue will be recorded as revenue when an expenditure acknowledged as liability when known, or benefit received. In fact, you can even recognize revenue when you have received the payments and you promise to do what? To deliver such. You can recognize the transaction. You have received the payment to deliver some item, and the production of the item is not readily available. Then once the production is now available, you will now do what? You dispatch it to the owner. So you have recognized revenue at the point of receiving that your payments, even when you have not given out the item out. Then the same thing is applicable to expenditure. You can acknowledge an expenditure as liability, even when you have not made the payments and you have also received the benefits. So accrual basis of accounting uses the notion of legal obligation to record financial transaction. Legal obligation is the sense that you accept that you have sold this item to a third party and you are recognizing such sales as what? As your revenue, even when you have not received the payments. On the other way around, when you accept a legal obligation in terms of expenditure, even when you have not made the payment, that this is your liability. So expenditure will be acknowledged as liability, even when the payment is yet to be made. So once there is a legal binding contract for the receipt of a render of service, recognition will be given to the income and expenditure arising out of the contract. I promise to sell a material to you, then in our contract, in our agreement, I ask you to make upfront payments, maybe 100% payments, while I will deliver in 1 week time or in 1 month time. So you have recognized your revenue, even when you have not supplied the material that you are selling to that your customer, provided that a legal obligation has taken place between the two parties. So the same way is applicable to the expenditure side. Now let us look at the advantages. Happiness. I hope I've answered your question.
Yes, thank you very much.
All right, you can lower your hand. Advantages of accrual basis. Very easy. Just take the advantage of cash basis as your disadvantages of accrual basis. Then take the disadvantages of cash basis as the advantage of accrual basis. One, the advantages of accrual basis. It reveals an accurate picture of the status or of the state of financial affairs at the end of the period. Otoma. Otoma, your hand is up.
Yes, sir. Can you hear me? Good evening,
We can
sir.
hear you now. We can hear you now.
Okay, so my question is concerning the cash basis. I don't know if can I ask?
Go ahead, go ahead.
Okay, so in a situation where you are supposed to render a service,
Okay.
they've paid you for it, but you've not rendered it. Are you saying that we'll do still record it under the cash basis?
Yes, yes. If you are running a cash basis of accounting, you are paid for a service, but you have not rendered the service, you will recognize it, but you will just be the one to know in your mind that I've not rendered the service, but you have recognized the payment as what? You are recognizing that payment as revenue at the point that you have received the payment. That is cash basis. But
Okay,
that cannot that can still work for accrual basis as well. Your question can still work for what? Accrual basis. You have received the money, but you have not rendered the service. So that means you have received the money and the money is now a liability with you. You have received the payment for a service, but you have not rendered that service. So it's a liability that you are having in your hand.
Okay, sir. Thank you.
So the accrual basis now give room for what? Debtors and creditors, unlike the cash basis. The cash basis doesn't know, even if you have received the money 3 months time and you have not rendered that service, you must render that service. So if you are running a cash basis, but in accrual basis, I gave you money 2 weeks ago, I'm not doing it again. You can set it off because service is yet to be rendered. 2, it could be used, Peter. Yes, sir. This cash basis, does it really help our country whereby somebody is giving money to do a road and we eat the money and we run out of the country? That one is a separate topic on its own. Because we have all it takes. We have all the architectures in place. Nigeria has the rules and regulations that govern all the activities of our finance. We have the EFCC. You'll be seeing it in all the topics that we are going to be treating. You have a monitoring department. We have the budget procedure to be taken. If you are to award a contract, is somebody to execute, you will not pay the total amount. So we have different method of contract awarding. You will not pay the total amount of that contract. You may pay 50% of the contract. Until when the contract is fully executed and the monitoring department go and assess the project and confirm truly that has been fully attended to according to the taste of the organization or sorry, of the government. So if the monitoring department did not give an approval for such project to have been fully executed, so the remaining balance will not be paid. In fact, such contractor can be arrested. So we have all this in place. So it's a topic on its own separately. So it could be used for both economic and investment decision making, as all parameters for performance appraisal are available. So it is very easy under the accrual basis. Okay, let us set off the total receivable with payable. Okay, if we net receivables from payables, what should be our own value at the end of the period? Then with that, you can easily ascertain what your performance appraisal, unlike the cash basis. The cash basis is killing most of the business because you are assuming that this transaction has not taken place, but it has been taking place. But because the cash is not being recognized, that is why you are not recording or recognizing such transaction to have taken place. So the disadvantages of accrual basis, it is very difficult to understand, especially by non-accountants. I do not believe in this difficulty in understanding the accrual basis. In fact, the non-accountants now have an understanding of accrual basis. Yes, is it not just to create room for debtors and creditors? Open ledger. The non-accountants in the house, didn't you know the ledger that you create for two sides of your accounts? Any non-accountants here? But now you are an accountant either way. So if you have graduated from foundation level to these skills, so you are an accountant, but yet to be a qualified accountant, which you are going to be by May 2026. You'll be a qualified accountant. So it does not permit easy delegation. It does not permit easy delegation of work in certain circumstances. So the accrual basis does not permit easy delegation of work in certain circumstances. So unlike the cash basis, that it is very easy to operate. And one of the disadvantages quoted under this accrual basis is that it is very difficult to understand. Unlike the cash basis that is very easy to understand and very easy to operate. Is it only when you see money that you recognize it? So under the accrual basis, there can even be a lump sum of transactions which will not go in line with how payment is being made. Yes, that is why accrual basis given for what? Both debtors and creditors. So you can you can purchase an item now worth of 50 million naira. Maybe by the time you are making payment, you may even pay 70 million naira, which you are going to be having excess in the hands of the supplier. So at any other point in time, you can still purchase an item again worth 120 million naira. At the end of the period, you'll be having debit balance in that account. So I think this is the part of reason why this disadvantage is quoting that it is very difficult to understand, especially by non-accountants, which does not permit easy delegation of work in certain circumstances. Franklin.
Good evening, sir.
You are welcome.
Okay, I want to. Is there any difference between a qualified accountant and a professional accountant?
They are both the same. Being a qualified accountant, you are a professional on that field.
This class here.
Being a qualified accountant, you are what? You are a professional accountant. Or you will not be called a qualified or professional accountant if you did not have the requirement, which is what? Minimum of ACA or ACCA. Franklin, is that clear?
Yes, sir.
All right. Peter.
Yes. Can inflation be a disadvantage in accrual basis?
Inflation.
Yes, sir.
If inflation doesn't have anything to do with the basis of this accounting.
Okay, let's say, for instance, now you bought something today, and the cost of that thing is like 10,000. Then by next 2 months, you went to go and pay that 10,000. Why the cost of that thing by that 2 months time, it has gone beyond. Yes.
There is no issue in that. You only recognize the value. In the basis of accounting is the value that you are bringing into your record. Because you will have agreed to purchase that item at the price that you are buying it. So the functional rate will be the rate that you are going to transact. Go to Aluminium Village. You can deposit for roofing sheets in January 2025. And your deposit still remain. And your effective rate will be the rate at the period that you pay, not at the period that you want to take your material. And before December, there will be changes to that currency exchange rate. So if you are paying additional that you want to pick, your addition will be based on what? The effective rate at the period that you are taking. But if you do not want to take additional, or you are not agreeing with the exchange rate or the inflation, then there is no need for you to negotiate. There is room for you to negotiate, and there is no need for you to carry on such. So that inflation, either inflation or deflation, doesn't affect the basis of accounting. The basis of accounting is only recognizing when we are recognizing a transaction, not on differences in rate or exchange rate or any other thing. Peter, is that clear?
Yes, sir. Yes,
all right.
Sir.
So is the value that we are recognizing under the basis. All right. We are moving on to the next basis. We have commitment basis. Commitment basis. This basis of accounting technique recognizes expenses as soon as expenditure decisions are taken. As soon as expenditure decisions are taken, we are going to buy a Chevrolet car to all the local government chairman in the whole federation in 2 months' time. So it has been stamped that we have recognized that transaction the day that decision has been taken. Nothing will reverse that decision, except it is now later generally accepted to review either to purchase it or not. But you are recognizing that transaction at the point that you are making such decision. That is commitment basis. So it is a basis that records anticipated expenditure evidenced by a contract or a purchase order. A purchase order. So you want to buy, as I gave an example earlier on. So we want to buy a Chevrolet car for all the local government chairman in the states. And as of today, we ask different producer of the material, submit your pro forma invoice or purchase order. Once we have received the purchase order and we have approved it that, yes, this is what we are getting for all the local government chairman in that particular state. So it has become what? It has become a transaction. We recognize such as what? As the transaction has taken place. So in public sector financing, budgetary and accounting system are closely related to the commitment basis. And not only in public sector financing, budgetary and accounting system that commitment basis were used. Sometimes in a board meeting, in private sectors, in a board meeting, once decision is being taken and the majority of the board member accepted the decision, so such will be recognized as what? As if the transaction has taken place. Advantages of commitment basis. Adjustment occurring when actual expenditure has been obtained does not affect the final account. Adjustment, either the price is reviewed upward or reviewed downward, or some of the items were removed. Maybe there won't be a need to cater for some of the items to be expended upon, which will not affect the account. We only recognize the actual transaction that occur. So any adjustment that will affect such transaction will not affect the account. And I think this is somehow also relating to the question that somebody asked earlier, if there is inflation. So inflation will not also affect this basis. If we are approving it now that we are buying it and we are not making the payment immediately and we are paying in 3 months time, so the only adjustment that will just occur is the price will not be as budgeted. It will now be as what? As it is currently. And that adjustment will still not affect the account. It is an aid to financial control. Popola.
Yes, sir.
Your question?
Good evening, sir.
You
I
are
wanted to
welcome.
ask, so how would the increase be recorded? Will it just so it will not affect any other account?
Okay. The increase will just be added to what will have been passed as what we have committed to pay for. And the narration will be there. Exchange or purchase difference will now be in addition to what will have been initially budgeted for.
Okay, sir.
Oh, all right. So it is an aid to financial control. A commitment is regarded as a charge which has been made on a budget provision. So we are committed to do a certain number of, or to carry on a certain numbers of expenditure. Mr. Talk and do. Yes, we are going to buy a land in Banana Island in 3 months' time. Minimum value, 3 billion naira. So it's an aid to financial control. Disadvantages of the commitment basis. You are committing yourself to what you don't think you are capable of doing. So the systems involves extra work. Actual big figures have to be substituted for the commitment provisions to finally determine the running balances under the sub-heads of expenditure. Oyewole Mutiyat.
Okay. Good evening, sir.
You're welcome.
Okay, sir. Sir, can you please explain that it is innate to financial control again, the advantage of commitment basis?
Okay. So a commitment is regarded as a charge which has been made on a budget provision. So it aids financial control in terms of keeping idle cash, one, and also in terms of committing projects that need to be attended to. Unlike a budget that may be on cash or accrual basis, which can later turn to something else at the end of the period. Under the cash basis, you may want to carry out an expenditure and you will not recognize expenditure when the payment has not been made. So that did not aid financial control.
Thank you, sir.
Accrual basis as well. You also aim at carrying on a particular expenditure. But if contingency expenditure that need urgent attention arises, you may end up doing what? Foregoing one project for another. But under the commitment basis, this will aid financial control. These are part of what we have make provision for, and we need to do what? We need to carry on that activity. Even if there is any other contingencies activities that will come up, either the government or the private individual will go and look for other source to do what? To finance such commitments. Is that clear?
Yes, sir. Thank you, sir.
You're welcome. Over expenditure is more. Okay, the disadvantages. The system involve extra work in the sense that actual figures have to be substituted for the commitment provisions to finally determine the running balances under the sub-heads of expenditure. So this answer one of the question here, that what are we now going to do to the difference? You are going to make an adjustment to that differences and you take it to the appropriate heads of expenditure. In looking at it, it costs what? Additional work, being part of the disadvantages of commitment basis. Over expenditure is more under commitment basis in the expectation that government may finally release funds to settle the legal obligations. And aside from that, some other over expenditure that may also occur, even without knowing what could be the market changes as part of inflation in the period in which we want to carry out such expenditure. I think last year, if you look at how inflation moves, price of commodity just keep on increasing, fuel price has gone up. And if you have made a commitment when the economy was in the booming period and you are now making a commitment to carry out an expenditure in the next 3 months, and at that period, you know you are going to fall into the victim of what? Over expenditure, because what you think that your capacity may be committed to will now be above what you are going to meet in reality. And the commitment basis doesn't mean that if you are committing now and we are going to make the expenditure, we are going to carry on the expenditure in the next 3 or 4 months, you can commit an expenditure today and execute it the following day. But the commitment basis is just a basis at which once an agreement has been sealed that we are going on this particular expenditure, So you recognize such as what? As an expenditure. Modified accrual basis. This is the basis under which revenue is recorded when received and not earned. While expenditure is recorded once its liability is incurred. Let me come again. Modified accrual basis. It is the basis under which revenue is recorded when received and not when earned, while expenditure is recorded once its liabilities is incurred. So it means that cash basis is used for recording revenue, while accrual basis is adopted for expenditure. Can you see the difference? Modified accrual basis is making use of two bases. It will recognize revenue in form of what? In form of cash basis, and recognize expenditure in form of what? In form of accrual basis. I hope that is clear.
Yes, sir.
All right.
Sorry, sir, please can you take that again?
All right. Modified accrual basis make use of both cash basis and accrual basis. One leg make use of cash basis, then the other leg make use of accrual basis. The leg that make use of cash basis is revenue. You recognize revenue, you record revenue when you have received cash, while you record expenditure once liability is being incurred, not when you have made payment for the liability. So the revenue now recognize the cash basis, while the accrual basis will recognize expenditure. Expenditure will recognize the accrual basis. So you make use of two bases. For cash, for revenue, you make use of cash basis, while for expenditure, you make use of accrual basis. So you give room for you buying raw materials on credit in form of trade creditors, but you will not give room for what? Credit sales. That is modified accrual basis. Boluwatife. Boluwatife. Okay. I think I've answered that question. And lastly, modify cash basis. Modify cash basis. This basis is a basis of accounting that is used basically in the public sector. In the public sector, because it is only public sector that will be that will still be expecting revenue for up to 2, 3, 4, or 5 years. And when the financial accounting have been closed, we are in 2025. Some government business enterprises or some private enterprises, government are just going for their auditing in order to recognize, do they remit the actual revenue that they're supposed to remit to the government? So if the government identify that there are some payment that these people supposed to have made in those periods, but they have not done that, so the government will ask them to pay, and there will also be a penalty that will be sanctioned on such individual. So it is a modified cash basis that is best used for that basis of accounting. So the modified cash accounting technique is appreciated where the accounting books of the government institutions are not closed, at the end of a year, but are open for some period into the beginning of the following year. So the government accounting period is between January to December, right? January to December, and the account is supposed to end in December. So the modified cash basis now said that the book of accounts will not be closed after that December. The account will still be left open, maybe for a period of 3 months, to accommodate some revenue that's supposed to have come into the government purse, since the government are not recognizing transaction or what on accrual basis, rather on cash basis. So the modified cash accounting technique is appreciated where the accounting books of the government institutions are not closed at the end of a year, but are often open for some period into the beginning of the following year. Aremu Tanwa.
All right, thank you, sir. So I want to now confirm. So what are you saying? The government they are using all the old basis, or
No.
they have this? Which one specifically are they using?
Okay, governments of Nigeria, we are making use of cash basis. Gift.
Thank you, sir. I'm clear now.
Welcome. Ibrahim.
Yeah, good evening, sir.
You are welcome.
Yeah, thank you very much, sir. Sorry, I just want to ask if this modify
Cash basis.
cash basis and the other one also
Modified
applicable
accrual.
in private organization.
Yes, it's applicable in some organization. It's applicable in some organization. So the modified accrual basis, for example, you will hear some organization that will say that there is no credit sales. So they are not allowing credit sales, but they are buying some of their raw material and pay later. I hope you are getting that logic. So some organizations adopt this. They said there is no credit sales. And what is the meaning of no credit sales? So transaction will be recognized as revenue only when they receive the money. If they did not receive the payment, in fact, any of the cashier or the distributor or the store or the warehouse that release the stock will be penalized. How do we dispatch a day and the payment is coming the following day? In fact, in that same day itself, maybe there is time vetting that this payment is supposed to have come into the account between so hours and the goods has been dispatched. So how come that this thing occur? So such the parties that are involved for the breach of the procedure will be penalized. So that is modified accrual basis. So there won't be what credit sales, but you have the opportunity to do what? To carry out some liability on credit, some expenditure on credit, but you did not allow for what? Credit sales. Then for the modified cash basis as well, I don't think this modified cash basis is applicable in private sector. Private sector, you can recognize your money anytime. In fact, even some private sector or most private sector, the standard give room for that, for you to make provision for what? For receivable or bad debts. You can even write some off bad debts. You can make provision. But if out of your bad debts, you're able to receive some, you can recognize it any time or any day or any year you receive it. So for the modified cash basis. So the book will not only be left open for just a few period of time. It is left open at any point in time that your debtors want to pay back their money. So, but for the government, where it can be mostly used, so the book will just be left open for a short period of time. So ranging between 3 months. 3 months. Hold on, Bolu, what if I will recognize you? Just give me 1 minute. Let me end this. Under this basis, the books of accounts are left open for a maximum of 3 months after the end of the year. so as to capture substantial amount of income or expenses relating to the year just ended. So Boluwatife, your question. Boluwatife, it's like you're having network challenge. I hope it is not only from my end. Others, can you hear me?
No, sir. We can't hear him.
We can hear you. We can hear you, Papa.
Okay, so
What?
Boluwatife,
Can't hear Boluwatife.
Boluwatife, please check your network. You can as well log out and rejoin. Oyeniyi Nathaniel.
Good evening, sir.
You are welcome.
Yes, sir. I think she already sent a question to the group chat.
Okay.
She said, I need you to please explain the difference between the accrual basis and the modified accrual basis.
Okay. Okay. On the chat box.
Yes, sir.
The difference between accrual basis and what? Modified accrual basis, right? I've explained this. The accrual basis give room for debtors and creditors. Accrual basis recognize transaction and revenue. We recognize revenue when revenue is earned, and we also recognize liability when the expenditure is being recognized. When the expenditure is recognized, irrespective of when the physical payment is being made. But the modified accrual basis, is it modified cash basis or accrual?
Accrual.
So then the modified accrual basis make use of both the cash basis and the accrual basis. But the cash basis that the modified accrual basis is making use of is only on revenue. So the modified accrual basis will recognize revenue only when cash is received and not when it is being earned. So it does not, the modified accrual basis did not give room for what? Credit sales, but give an allowance for what? Accrual liability. Give an opportunity for accrual liability. So it makes use of cash basis for revenue and makes use of accrual basis for liability. Favor.
Yes, good evening, sir.
You're welcome.
Yeah, I'm so sorry to take you back, but
Problem.
my question is based concerning the commitment basis. Where I was at the point was not convenient to talk.
Okay.
So I just want to confirm because you said that the expense is recognized once you take a decision to make that expense. So does it mean that the supplier of the product or the service does not have to be involved? So as soon as I just make a decision to buy something, I would automatically recognize it.
We are in a board meeting. Favor, are you there?
Yes.
We are in a board meeting, and we see that we need to carry out a particular project, and we now discuss about the project, and from there we look at what will be the cost of that particular project. Oh, the cost will be 20 million naira, and once the chairman of the house approve that we are going for that project, we have recognized. We have not seen the supplier, we have not met with any of the supplier, so we have recognized that this year we are carrying out that particular budget at the rate of 20 million naira. So we have recognized that transaction has taken place. That is commitment basis.
So it's almost like budgeting.
It's not like budgeting. You may not have even planned for that particular expenditure. You may not have even planned for it at all. Budgeting, you will have projected for what you want to do in budgeting. Is that clear?
Thank you.
You are welcome.
Yes, it is.
All right. Victor. N1.
Yes, sorry. Yes, the reason why I raised up my hand is because I just wanted to say that the commitment basis is more like Accrual, basically. More like Accrual, but fine.
And the commitment.
Yes,
Not
sir.
more like in that basis. The commitment is not even talking about our what is it called? Talking about if we are expecting revenue and how much are we going to expect? Will it be in form of accrual or will it be in form of cash? But basically, this commitment is on expenditure purely. The commitment is basically on expenditure. Another thing,
Yes,
it may
sir.
not
So,
only be on expenditure as well. Like what Favor was asking, that can we say that wait, somebody should remind me. Okay, can we call it budgeting? So it may not also be necessarily to be on an expenditure. It can also be in form of revenue. In form of revenue in the sense that we can agree in our meeting that, okay, before one of our building that we have in Gwagwalada, and that building, we are not making use of the building, then the value, we are not even having any form of revenue, but we can make use of that building as a rentage. And from now on, we are going to be making that building where we are renting it out, and the annual rentage will be 50 million naira annually. We have committed that is the amount that we'll be expecting from that building henceforth. We have not, it is not part of our budget, but we are now recognizing revenue in that our meeting. So we have made a commitment and we have sealed it that we'll be receiving a revenue from that building starting from the coming financial year. So we have committed it already, and we have made it as part of the transaction that will be taking place in our financial activity. Victor, is that clear? So per
all right,
se is not relating to the accrual basis. So it is neither accrual basis. We are just making a commitment. So how we want to carry out the revenue or how we want to carry out the expenditure doesn't concern either cash or accrual. But we are making a commitment that this is what we are going to do, and it will become part of the transaction that seal that transaction has already taken place. So if we said that we are renting out that apartment for 50 million naira starting from coming financial year, so it will be part of the revenue that we are going to be recognizing starting from coming year. Ali Tosin.
Yeah. In the course of your lectures, you made mention that Nigerian government made use of cash
Make
basis.
use of cash basis.
I want to confirm,
Yes.
is it all governments that make use of cash basis, or can government make use of accrual basis or cash?
Any government can make use of any basis. Any government can make use of any basis. So depending on what approach or what method can work for any government.
All right, sir.
So, but Nigeria, we make use of cash basis.
Okay.
All right.
Thank you, sir.
You are welcome. Users of public sector accounting information. Users of public sector accounting information. We have internal and external users. Just like we're talking about the roles of the public officers. So the internal users of the public sector, we have the executive, such as the presidents, the governors, the chairman, the chairman, local government council. We have the federal ministers and state commissioners. We have top administrators of government departments, example, permanent secretaries, and we have the organized labor union in the public sector. All have their own expectation. So the executive, such as the president, so they have all their takes, their salary, their this, their that. They also have their own decision to make on the public sector accounting information. Okay, this is the budget. How much are we going to be incurring? How much are we expecting as revenue? So actually, for the previous year, what do we budgeted for? What do we actually have? Okay, what should we now base our calculation on in the coming financial year? So the federal ministers and state commissioners, the federal minister role will still be the same role that the president is looking out for, because the federal ministers will assist the president. The state commissioner will assist the governors, while at the chairman local government council, we have treasurers, right? We have treasurers at the local government council. So they also support the chairman in the local government. So the top administrators of government departments, we have the permanent secretaries. So all their role will also fall in line with that of the president and the executives arms of the government. And lastly, the organized labor union in the public sector. We have the external users. The external users, we have the National Assembly, who is representing you and I. They are representing the general public, the general interest of the public. Somebody is saying you are deceiving yourself, but that is what we know or how it should be. So the National Assembly, so they are to take decision on behalf of the general masses of the country. So the members of the public as well, you and I, we can criticize the government and the payments, the total revenue that comes in. You promise to do this and you promise to do that, but we did not see the benefit of most of these transactions that the government are reporting. Foreign countries, so they can also make use of the public sector accounting information. So part of which we can have foreign observers, foreign investments, among others, or foreign investors. We have foreign financial institutions, IFE.
Yeah, good evening, sir. I wanted to ask, where do civil servants fall under these users?
Civil servants.
Civil
You have them
servants,
under
yes.
you have them under the organized labor union. IFE, is that clear?
Yes, sir. Thank you, sir.
You are welcome. So foreign financial institutions such as IMF, International Monetary Fund, that is where your government usually went to go and borrow money to cater for some of the deficit budgeting. We have the creditors, both local and foreign creditors. And lastly, we have researchers to come and see how is the public sector accounting is being taken care of in your country. Comparison between non-profit oriented organization, which is public sector, and profit-oriented organization, the private sector. So the difference will be based on the basis, then we now differentiate between the two sectors using each of the bases. We are used to most of this before now. Basis number one, we have profit. As the name implies, non-profit oriented organization, the public sector. The public sector is not set to make profit, but any profit made by the government is not to be shared by a set of individuals, but to also to cater for the welfareism of the masses. So the main objective is to provide adequate welfare to the people at reasonable cost. Why for profit oriented? That is the primary purpose of private sector. The main objective is to maximize profit, maximize shareholders' wealth. Revenue, in comparing non-profit oriented organization with that of the profit oriented, how do we classify revenue under the non-profit oriented organization? Revenue is derived from the public. Yes, is you and I, Ife and Tosin and Victor, Favor, all of us here, we pay to the government. But we thank God that by 2026 now, January 2026, we are going to have a relief. There will be a relief in that your payment that you are paying to the government, because government said that they will not take too much from poor Nigeria. Poor Nigeria. So they classified me as among the poor Nigerian. So, and I like it. So the government are taking too much from me. Too much, heavily. So starting from January 2026, so the government said some of us or majority of us will not be paying tax. Will not be paying PE. I see the way Alito Sin is smiling. You laugh out loud. I can see that from your emoji. Revenue. So revenue is derived from the public in the form of taxation, fines, fees. If government said that they are not going to take too much from poor Nigeria, that doesn't mean that you should go and violate the law. You are going to pay. In fact, the payment of fines and fee are far higher compared to the pay that you are paying. Pay is a chicken money, but it's a small offense can even lead to your annual salary itself, your annual. Some fine can lead to annual salary. So revenue is derived from the public in the form of taxation, fines, fees, among others. While from the profit-oriented organization, they too, they also take profit, they take revenue from us as well, but they are rendering service. It is take for that. So I will give you money, then you render the service for me. So I will pay for a goods, then you supply me that goods. Obtain their income principally from sales of goods and services. That is for profit-oriented organization. Legal formation. Yes, the non-for-profit oriented organization are created by law, by act of legislature, that is national or state assembly. That is the legal formation. Then the legal formation for profit oriented, they must be registered with Corporate Affairs Commission. They will be registered with Corporate Affairs Commission, but non-for-profit oriented, they are not being created by Corporate Affairs Commission. So they will just be, there will be a law that will be created on how to carry out some activities. Bayo.
Yes, sir. Good evening, sir.
You are welcome.
Yes, sir. Please, I would like to take you back to that revenue. Please,
okay.
Let me see it. The revenue under the okay, you have not. Let me scroll down, scroll it up.
Is it fine now?
Yes, under revenue, yes. He said under the public sector, the revenue is that the majors they derive their revenue through taxation, fine, and fees, while the private sector from sales of goods and services. I think I agree with that for private sector for goods and services, but that of public sector for taxation, fine, and fees, is that not sort where the public sector are sourcing for their own fund to finance the public corporation?
For the public corporations, it is not all that will be financed through tax, fines, and fees. There are some of the public corporations that will be financed through debt. So when we are talking about revenue here, we are talking about major revenue stream to the government. It is through taxation. So for corporations being established by the government, so it is not necessary that the payment will come from the tax revenue or fines or fees. In fact, they will be so minute to invest in some of these government business enterprises, just like railway corporation. So government tax, if you go and look at most of these government business enterprises, their revenue will be from a loan, and mostly they will now make such project to be a project tied loan, whereby that investment or that business will be the one that will be paying back that will be paying back the loan being collected. Bayo, is that clear?
Okay, sir.
All right. Peter.
Yes. Sales of oil in government, where does it fall in terms of revenue?
It's part of revenue to the public sector. And that is the function of the NNPCL, one of the functions of the NNPCL. Is that taken? And we are going to discuss that under the revenue collection agencies. Revenue collection agencies. Okay, so we have talked about the legal formation. Let's move on to the budgeting. For the not-for-profit oriented organization, the public is more interested in annual budgets than the annual reports. In the public sector, they are more interested in the annual budget than the annual report. So the report will be based on what has been budgeted for. While on the private sector, the public is more interested in the annual report than the annual budget. So we don't need what you are having in the budget of your organization, but we are interested in your annual report. And one of the public that are more interested in the annual report, it is all parties, although all the stakeholders have different expectations. So the shareholders mostly need the annual report. So the annual budget on how to make profit doesn't concern the stakeholders, but what is the result? What is the end result at the end of the period? The supplier need the end result of the private sector. Yes, of the private sector. So to know how liquid is that organization in terms of repayment. Then the customers as well, improvement in the quality of the products. Then they need a report, annual report, not the budget. But in the non-for-profit organization, the public is more interested in the annual budget than the annual reports, because part of the budget, you are expecting some of the critical area of the economy to be included in the annual budget. But if it is not put in the budget, there is nothing that you are expecting from the report, because it is garbage in that you are going to have as garbage out. Augusta.
Okay, sir. So, sir, I don't know. What's the difference between the annual budget and the annual report, sir?
Annual budget is an estimate of the expenditure and revenue that will be carried on in a particular year. And the annual report will now be based on actual activity that occur on the annual budget. Actual activity. The budget is an estimate. This is what we are going to do. We will do bridge between this area to this area. in this coming year. After that, we are going to do a railway construction for this period. Okay, from that budget, we expected that the total revenue that we are going to get will be so amount. We are going to get 20% from tax, 20% from oil. Okay, from our expenditure as well, we are going to carry on some programs in the education sector. We carry out some programs in the health sector. So that is the budgeting. But the annual report will now give us the details analysis of what the budget has stated and what is the actual that we now actually carried out from that budget. That's the difference. Augusta, is that clear?
Yes, sir, it is. Thank you, sir.
All right. Dixon.
Yes, sir. Good evening, sir.
You are welcome.
Okay, based on the explanation you've given so far, I still want to ask, like churches, what kind of reports do you produce for them? Is it budget or is it annual budget or annual reports?
It's a critical question. And I don't think. So please mute your mic.
All right, sir.
I don't know where to classify churches. Is it under for profit oriented or not for profit oriented? Seriously, I'm confused. So I don't have I don't have a specific answer to your question, Dixon. So sorry about that. So I don't have a specific answer to that.
Maybe it's modified public and non-profit and private.
Okay, modify what?
Used to go and buy these boxes. See if you have any said, Shy, if you send us in next week, this is this week, so I will go the to go. Anything I go buy now.
Akpa.
Mute your mic. Hey.
Akpa, you are in the class. So somebody said maybe you are going to recognize it under modified non-for-profit. So please don't let us introduce what we don't have in our syllabus. The one we have here, we are still trying to bring them on board to see how we are going to break it down. So Dixon, so apology, I don't have a specific answer to that question. But if I'm to just give a personal suggestion solution to your question, that should just be recognized under the non-for-profit oriented. Should just be recognized under non-for-profit oriented. And lastly, accounting. How do we give reporting under the account, or how do we account for non-for-profit oriented and for-profit oriented? The non-for-profit oriented, which is the public sector, they are strictly operate on IPSAS, International Public Sector Accounting Standard, cash or accrual basis. Strictly operate on IPSAS. Then while on the private sector, so their basis of accounting or their rules and regulations standard that will be followed will be strictly operate on international financial reporting standards. So this is the end of today's class. We'll see next week. Any question, one or two questions before we call it a day? Question.
Sorry, please,
No
can we
questions,
have,
sir.
I don't know if someone asked about
I
the
should
course
move up.
outline. Course outline.
Course outline.
Yes.
Okay, I will drop
Are we
that.
getting a course outline?
The course outline is already in my, what is it called, in my slide. in my slide, but you need the course outline generally to know the total topics that you are going to treat. So I will look for a way to draft that. But with this, my own slide, you will see the whole course outline that I'm going to take you. I've named it under each of the chapter 1, 2. I think I have up to 20 chapters in my own slide now that I still have some to add, like the new topic that is introduced, sustainability and sustainable development, that we are still going to add to the syllabus. Bolu
Okay, so when will this note be dropped, please?
I'm dropping this particular note immediately after this class now on the WhatsApp group.
Okay.
You are welcome, Ife. Bolu what Ife? Bolu, we have been finding it difficult to get you. But if you can hear us, we cannot hear you at all. But okay, Bolu, can you hear me now?
Yes, I can hear you. I think it's my pod. Yes, so, not my network.
We can hear you now.
Okay. So sorry, please. I want to ask. I'm new here actually. So is this our first class on?
Yes, nobody is new. You are all new. So this night class is the first class. You are not new.
Okay. Okay. All right. Thank you, sir.
Is that true? This night is the first class, right?
Yes, it is.
Okay. Adasa. Yes. Adasa.
Yes, sir. I hope the class video recording will be.
The admin, that is the work of the admin. In fact, the admin is waiting for me to end this class. Once I end the class, the admin will just share you the video, and it will also be uploaded on your app. Yes. BC Lola. BC Lola.
Yeah, good evening. So I just wanted to ask that would you send past questions on this topic for us to do, or as in I want to understand if like you want to drop. Yes.
Yes, there is provision for what is it called? Quiz on your app. There's provision for quiz on your app.
Yeah.
If you look at the app very well, but we have not started sending quiz. And for my own side, in fact, our admin has profiled me, but I'm here to log into my learning management system. So please, once I log into the learning management system, that is where we are going to be dropping questions for you, and the date or the time frame for you to submit. We are going to be using that learning management system. BC Lola, are you a sister to Tosin?
No, I'm not.
Ali Tosin and BC Lola Ali. So I know two of you are brother, and so two of you are sister. So I'm connecting two of you together again. Adasa.
Wow.
Adasa. Adasa is not available. So I think that is all for today. So thank you.
My answer my question has been answered. So I dropped my hand.
All right. So thank you all for your time, for your patience, for your contribution, for your patience. I've also mentioned that as well. So see you all next week. Thank you. Do have a wonderful weekend.
Thank you, sir.
Thank you, sir.
All right. Thank you, sir.
We will see tomorrow now.
We are meeting tomorrow. My financial managers.
Yes, for FM.
What time?
For FM.
Okay. 7 to 10. 5 to 8. 5 to 8.
Yes, 5 to
financial
8.
management.
Yes,
Sorry,
5 to
sir.
8. Yes, sir.
Yes.
Last week class on FM.
Last week class.
Yes, I think we started it.
Yes. Let us discuss that in our FM group.
All right, sir. All right, sir.
So thank
Good
you all.
night.
See you next week. Sorry, see some of us tomorrow, but in public sector, see you next week.
Next week.
Yes, sir. Yes, sir.